Opportunity zones are one of the most powerful tax strategies for real estate investors and business owners that exist. When you go to sell one of your properties or businesses in op zones, the tax savings can be absolutely insane. The general idea is that if you have capital gains, meaning you bought something, it appreciated, and you sold it, and you have a capital gain, you can invest it into an opportunity zone business or property and defer paying that capital gain for at least 5 years. Not understanding opportunity zones is a huge oversight if you are a business person and making money and have capital gains. I've seen a lot of people that make millions of dollars or not pay millions of dollars in taxes and are literally like, oh, this is too complicated to figure out. They pay millions of dollars and not taking advantage of opportunity zones. If you structure a property or business correctly, this is an incredible opportunity for huge tax savings. My name is Meg. I run a real estate development company out of Nashville called CA South, and I have been building in opportunity zones since the legislation came out in 2018, and I have purchased over $100 million in opportunity zone assets. So one of my favorite opportunity zone assets I have invested in has been my personal office for our development headquarters. This is located in a very up and coming neighborhood in Nashville called Wedgwood Houston. And this is all the entire neighborhood's an opportunity zone, which is really lucky because it's just a few minutes from downtown Nashville. A lot of cities have very advantageously placed opportunity zones. I got this project off market, got this deal off market from a residential broker that was listing it. Super nice guy. I think he cold called me. I returned his call because I'm a cold caller, so I always like to at least give people that courtesy. And he told me about this office that he had in this neighborhood. And I think I purchased it for about $1.5 million. It was 5,000 square feet, total dump. There was a homeless person living in the front porch of it. It hadn't been touched. It was basically like a square bunker that was a electrical capacitor manufacturing plant from, I believe, the 30s. And someone had had an office there maybe 10 years before and had been completely abandoned. There was cat piss and everything else. So I basically spent, when I say almost $2.5 million. So one aspect of an opportunity zone is that you have to invest and double your basis for, how much you paid for a property. Because the whole point of the opportunity zone legislation is that you're investing into an area to help improve it. So you're spending money in the economy and you're making the built environment better. So I took it completely down to all of the concrete and the studs and renovated the entire thing. I spent more on the renovation than I did on the property, but it ended up being a beautiful building. So, if you just offhand say that my cost basis is maybe almost $4 million or $3.5 million, I'm just going in there. I basically own it personally. My company pays rent. I have a few other tenants that pay the mortgage, and it's just sitting there appreciating. So what's great about these opportunity zone neighborhoods is because other investors have come in and are incentivized to build there. This area over the last couple of years has become extremely hip in Nashville. So we've gotten a Soho House. We got a super popular restaurant called Pasties from New York. I literally just went to an opening in this neighborhood last night that has all these super high-end shops like Tiffany & Co. and all of these high-end retailers all in the neighborhood. This was a manufacturing area, 5 to 10 years ago. And since the opportunity zone legislation, there's been all of this investment. It's literally become one of the most hip, walkable, fun restaurants, bars, tons of office, creative office in Nashville. And my office is in the heart of it, all walkable to all of these cool places. And so while my basis, call it say 3.5 million, it's probably worth, maybe not double, but somewhere around that. And if I hold it for 10 years when I purchased it was several years ago, it'll most likely be worth, maybe triple, if not more, just with everything that's gone on in that neighborhood. And the difference between what I paid for it and invested, so call it 3.5 to 4 million, if I could sell it for maybe 8 to 10, depending in 10 years, I will not pay any taxes on that, the difference between those. So you're talking millions and millions of dollars tax free because this was in an opportunity zone. So there's a lot of ways that you can take advantage of opportunity zones. The very first thing that I tell people to do is to look at the opportunity zones in their area. So by looking at a map of the opportunity zones in your area or wherever you want to invest, will give you a landscape of where the zones exist that you can invest in. Another good way to take advantage is a ground up development project. So either investing in a fund that's building a ground up development project or doing a ground up development project yourself, because you have to double your basis when you invest in opportunity zones. So it doesn't really work to buy a building and do a paint and carpet redo because you're not spending enough in the zone to get that tax treatment. You can also operate and start a business in a qualified opportunity zone, which, as long as you do your business in that area and you keep your equipment there, will allow you opportunity zone treatment. So if you ever go to sell that business, you can sell that business tax free, which is incredible if it's structured correctly. Another piece of advice is that opportunity zone structuring can be very complicated. It is, a piece of legislation that has been around for several years, but it's very important to invest in a very experienced lawyer and CPA that understand opportunity zones, because one little nuance of it not being set up correctly can blow the entire investment. Another way to take advantage of OZs is a little more complicated, but it's to invest or buy a development project that has been set up as an opportunity zone. All of the work and risk has been taken on, but you're buying it before the certificate of occupancy or before the project's complete. A lot of investors have figured out this loophole and are able to get op zone treatment on projects that have already taken on all the risk and done all the investment, but they're just coming in at the last minute and investing prior to getting the certificate of occupancy or basically closing the project out. One thing we've done in our condo projects that are in opportunity zones is set them up so investors can buy a condo that is a cash flowing opportunity zone business before certificate of occupancy and set up their op zone business and run it out of, and have a cash flowing real estate investment in our condos that are short term rented through Airbnb. So I cannot give any tax, legal, or investment advice. However, the way that we've set up our condo projects that are located in opportunity zones allow investors that have op zone cap gains to buy a condo unit in our building before certificate of occupancy and set up a short-term rental Airbnb cash flowing asset, which qualifies for an opportunity zone business. And basically they get to take advantage of op zone. They own this asset for the qualified amount of time. It cash flows and can appreciate tax free. And that's something that is very powerful for an op zone investor, to have a turnkey cash flowing real estate investment located in an opportunity zone where they don't have to do the renovation on it and they don't have to manage it because we take care of all of the management. So it's just another way where we're really trying to cater to op zone investors. If you do want to learn more, you can check out the new brand that we're launching called The Modernist by clicking here.